Hello and welcome. Truck drivers protesting in London, dock workers rallying in France, and students demonstrating in Indonesia, all with one common theme: the cost of fuel. To make matters worse, the price of oil is on the rise again, and the impact is being felt around the world. It's not only the average consumer who's affected. Ford Motor Company has announced that it will cut production levels, and airlines are also talking about reducing services. These industries could soon be looking at massive layoffs and major restructuring. Well, as always, the impact on consumers' wallets will be even more painful. On today's show, we ask who controls the price of oil and what, if anything, can consumers do? You can tell us what you think by phone or email. The numbers and the contact details are there on your screen. Joining us now from New York is the man who sealed the deal to create the Middle East's first mercantile exchange in Dubai. John D'Agostino's story is a fascinating one that traces the life of a kid from Brooklyn who found himself in the center of global oil politics. It's a story that comes to life in the book Rigged, the true story of an Ivy League kid who changed the world of oil from Wall Street to Dubai. Also joining our discussion is Dr. Ali Hussein, an oil industry consultant who's been based in the United Arab Emirates since the mid-1990s. Previously, he worked for the Iraqi oil ministry. I welcome both of you to the show.
Thanks for having me, Riz.
With pleasure.
Thank you, Riz.
Thank you, sir. Now, John, before we talk about the politics of oil and the high price of fuel and so on and how that's being affected, I've got to ask about that story that's lived out in Rigged. It's an interesting read, and I wonder how true to life is the story in terms of your effort to set up the mercantile exchange in Dubai.
It's very true. The author, Ben Mesrick, has a style of writing that he coins narrative nonfiction. So there is a bit of narrative embellishment to the story. There are some composite characters and so on. But the story itself and all of the really interesting scenes that I get asked about all the time are for the most part, extremely accurate.
Now, was it as colorful as the life of the alter ego David Russo?
It was more so. I had to protect the innocent on some of these stories. But we had a great time. We did something we felt was extremely important. And it was not a normal transaction. So there was some very interesting situations we had to get around, some conflicts and negotiations. And we did what we had to. So it went well.
You know what was interesting, actually, is the story, John, of your impression, or at least the character's impression is your impression of the Middle East before you first went there. And I think this is something that, well, certainly I faced in telling people about the UAE and areas in the Gulf. And I think your view obviously has changed since being there. But you had to overcome quite a few prejudices, especially because of your own personal family experience with 9/11, didn't you?
Yes, unfortunately. And I think it speaks to the difficulties of people going over there for the first time. I was very, very fortunate in that I had been exposed to a wide variety of interesting and international people through studies at Oxford or through studies in the US. And even then, I think post 9/11, it was very, very difficult for me to get around everything I was being told, both from the media and from my own personal life around that part of the world, particularly the tendency to homogenize the entire region. That was the part that, despite all my advantages, I still was subject to.
Now, having been through that experience and having done business in such a big way, in the UAE in particular, how has your view changed? How do you convince people now, somewhere like Dubai, Abu Dhabi, anywhere else like that is a place to do business with?
Well, unfortunately, the first thing you learn after multiple conversations, hundreds of conversations, is you can't convince people who don't want to be convinced. But for those who are actually interested in the region, just continually beating them over the head with the complexity of the region and the complexity of the Arab characterization and the Muslim characterization as it exists currently across popular media, and educating them on just my personal stories and experiences. Hopefully, the book and the movie Rigged will do somewhat towards that end.
Now, more importantly for our debate on oil, in terms of the content of the book and the show itself, from your experience of Wall Street and knowing the New York Mercantile Exchange, how fragile is the relationship that America has with the rest of the world when it comes to oil trading?
I think it's amazingly fragile. Obviously, we have to distinguish between the physical trade and the derivatives trade. The derivatives trade, the relationships on the derivatives side, the hedging side, the futures and options activity, which is a vital part of the global oil economy, is extremely tenuous and, quite frankly, did not exist. This deal was one of the first public attempts to make that happen. There, of course, have been very, very deep relationships between major oil companies and different trading venues and whatnot, the swaps market. in the Middle East. But on a listed exchange marketplace, it really didn't exist before this. So I think it's extremely tenuous, and I think it's something that's extremely important going forward.
Let's bring in Dr. Ali Hussein here. Glad to have you with us from Abu Dhabi, sir. And I've got to ask you, from your perspective, your extensive knowledge of the oil industry, is there any one person, entity, when I say person, but I mean one entity that sets the price of oil, that actually clearly determines where oil is going to stand? Of course, we're seeing prices at sort of record highs nowadays.
Not really, Riz. What has been happening during the last few years, oil prices have been demand-driven. There have been an increase in demand, from big countries such as India and China. The growth rate in these two countries have been on the higher side. For example, in India, growth rate has been about 8%, and China about 10 to 11, 12%. These two countries, they have about 2.5 billion people. And of course, when there is a big increase in demand for oil, at the same time, you find that the increase in the supply of oil is lagging behind. And this is expected because the lead time in the oil industry is between 3, 5 to 10 years. Even if you invest now to increase oil production, it will take you about 3, 5 to 10 years to get that oil from the ground all the way to the final consumer. And this is the way it has been. So there is not one entity or one person controlling oil in the international oil market. There are a lot of factors, short-term factors, long-term factors, supply and demand, oil stocks, for example, in the USA, or geopolitical disturbances in some major oil producers, and so on and so forth. But plus, we have the speculation side as well.
Yeah, but Dr. Hussein, I was going to ask you, is there a real connect between the supply and demand, or is speculation playing a major part? People talk about a crisis in the sort of situation with oil a lot of the time.
I heard this story as blaming only speculation on the side of increasing oil prices. But for heaven's sake, these speculators, they don't, work from nothing or on nothing. It must be fundamentals. It must be supply and demand now and in the future. These are the people, who are forecasting what is happening now and what is going to happen to supply and demand in the future. And this is how they speculate. They don't speculate, out of nothing. There must be something, they are using in order to do their speculations. And as you can see from the market, their speculation is getting them some money, because they are basing their speculations on what is happening to supply and demand at the moment, and their forecast in the future.
Well, let me bring in John D'Agostino for a view on this and ask, I mean, there is obviously a human element to this, the human psychology to the extent of all this, and I wonder when, to what extent there is a panic when prices go crazy like this, and to what degree you feel speculation plays a part, especially the impact of people, the way people on the street talk about the oil prices.
Absolutely. Well, first of all, I'd like to start by saying I echo what Dr. Ali just said. I think he's dead on. I'd just like to add one more data point to that. I understand why people are blaming speculators. The amount of money that has flowed into these capital markets, these oil markets, in the last 5-7 years is enormous. And a lot of this money is coming from investors, meaning not individuals who are buying or using crude oil, pension funds, endowments, family offices, hedge funds. So when you look at that raw data, it's indisputable. And of course, obviously, prices are going up, so there's more buyers and sellers. That's almost a moot point. The question is that money chasing the fundamentals, or is that money chasing itself? And there's evidence on both sides. The pension funds, these large institutional investors, tend not to invest capriciously. We tend to think about smaller hedge funds as being capricious investors. But the reality is these funds, these true speculators, can make money on the long side as well as the short side. So there's no doubt at all that the net amount of money flowing into the market through index funds and through massive institutional investment has played a role in lifting up short-term crude oil prices. You can't argue that. But there's a very valid argument that these investments are being made because of underlying structural inefficiencies. Now, when you talk about what the word on the street is, I assume you mean the word amongst the trading community. The trading community that I speak to, the hedge funds particularly, are fairly agnostic as to price direction. They make money on the short side, they make money on the long side. So they're watching this institutional money flow, and they're trying to look at the money flow. They're also looking at the fundamentals. And I think, you know, the reaction is that oil probably should be a lot more expensive than it was 5 years ago. Maybe some of the recent moves, it moved $5 over a 2-day period about a week and a half, 2 weeks ago. Some of those moves might be just a function of massive inflows of capital, what you would call short-term investment or speculation moves, and those might reset. But I don't think many people believe that we are dramatically overpriced. Oil might be trading at 135 versus 132 because of speculative activity, but not many people I know believe it's trading at 135 versus 70 because of speculative activity. Well,
John D'Agostino and Dr. Ali Hussein, don't go away. We have to pause briefly. After the break, we look at the possible benefits of higher fuel costs. Don't go away.